What's up, guys? Welcome to another episode of Inside Traders. My name is Caleb, and I am your host. We don't really have guests, so it's just you and me here. And on this show, we talk about markets and crypto and mostly Tesla and Bitcoin. But I got inspired by the David Lynn podcast, which I've been listening to. He had a guest, Jason Shapiro, who does these quick updates on just like what he's buying and selling, what he's interested in. I thought that was a pretty good idea. So I figured I'd do like shorter updates that are more just like, what am I doing, right? Like, what am I actually building and what changes am I making in my portfolio, that kind of stuff. And hopefully if I'm doing anything dumb, you guys will let me know in the comments. But I don't think so. So we could fight. If so, let me know. For real, leave a comment. So yeah, this week, like, of course, my primary focus is always going to be Tesla. If you've heard me ever speak, even just like in a restaurant placing an order, I will find a way to mention Tesla. So like that is always kind of the focus. And right now it's just in this like 35% decline since the year-to-date decline. And so obviously the markets have to stay balanced, and so if they want to buy up one sector, they have to sell another sector, and they are selling Tesla hard. There is basically a momentum play happening, which is really paying the momentum investors, which I would consider myself a little bit of a momentum investor. I'm like a FOMO investor. I buy anything I will feel FOMO on. That's like my buy signal is FOMO. But it only works. It doesn't work when the price is high. It only works when the price is low, or at least low compared to what I think it should be. And so Tesla is right there. So yeah, I've been buying up, as I said last time, I've been focused on buying up Tesla, TLSY, TSLY, Tesla. And that is a dividend fund, which is just at all-time low prices. Basically, you've never been able to accumulate more shares per dollar of cost than today. That was not really true today because it's been kind of outperforming Tesla since this whole week, basically. And also, I assume it's starting to juice up for the premiums of the next dividend release. And so, yeah, I'm buying up Tesla and just averaging into that. My thesis there, my idea there is that I'm looking at the yield max method. I've listened to, I can't remember his name, Jason something. One of the guys from Yield Max kind of explained what they're doing, this covered call strategy. I've tried it. It's not easy. And it makes sense to me that they would be generating a good amount of income doing that, especially if they got better at just maxing out the yield. And by basically capturing more fake premium, like more, like when the implied volatility is spiking at the same time that the market is euphoric and whatever, just every bit of positive price pressure you can imagine, that's when like you buy back your puts or something. I don't know, whatever. That's when you take on a little bit more risk to generate even more yield. I don't know. Like it sounds like they're experimenting with that with like the Misty, the MicroStrategy yield ETF. Point of all this is we can observe through the history of the dividends on both Tesla and Nvidia how the dividend payout is clearly tied directly to the stock price. And it will have to always be that way because of the contract prices of the calls that they're selling, or on their inverse funds, the puts that they'll be selling, I guess. Either way, they're going to be selling those with that premium. And what's the point of that? Well, we get the income. And so, yeah, if you're selling a call that is like 25 times more of an actual dollar value, like nominal value, maybe it's called, but like, just like the contract that they're selling went from like $1.50 to like 300 in the case of Nvidia. So like that I think accounts for the difference in premiums. Are we streaming? Hold on. Let me make sure we're actually streaming here. I need some status indicator. Okay. I think we're streaming. Good. So yeah, so that's the point, is like, if the dividends is tied to the stock price, then the dividends on Tesla in time will be tremendous. They'll be outrageous. They'll be the same as Nvidia is today. Nvidia is getting $2 a share, $2 a share right now in dividends. It's extreme. It's extreme. And so if you don't know how it works, basically when you're getting a distribution, some of the value is removed from the value of your shares. And the idea is that you're going to reinvest those through a drip system. Although I would say you'd be wise to just like hold for a little bit and just count on buying in on a big down day. And if it goes forever up and to the right forever, oh, wow, you missed it. It's not going to happen. Just like use the distributions to improve your cost average, basically to improve your dividend ownership. And so I'm interested in that for a few reasons. One is because I want to have some different types of exposure to Tesla, since I'm using margin and Tesla is very bad for margins. It's like better to play it through options and these other inverse funds. I mean, the margin ratios on a fund that provides 2x price exposure on shares for Tesla is practically the same as the underlying itself. It's ridiculous. It's ridiculous. And so that kind of got me interested in Tesla, because it's got just, you can borrow against those shares and it pays out a dividend. But in my just kind of poking around, I realized that, oh shit, Nvidia is getting $2 a share. Tesla's dividends have been decreasing. Obviously, the dividends are going to appreciate with the price. And so let's say Tesla does a 5x from here. Buckle up. It could happen. I think that means you could expect 5x the dividends, which would be about $2 a share. So then the number is like, okay, well, if I want to diversify my income, what percentage makes sense? And then there's your share target, and you just cost average in. And there's never been a better time in one of the world's best companies. I'm doing the same thing with Apple, but sorry, Apple, I love the product. I'm always going to be an Apple guy. But I do think I don't know how to value those shares. It's so hard to value because they did so many buybacks. And I just feel like one day they're just going to sell them, and I'm kind of want to wait for that, like when they go on sale. Yeah. So, but I am buying the Appley and the Misty. I'm buying a couple of these Yield Max dividends, and I'm just going to play with them and see how they do. Really excited for their inverse funds, the Crash and Fiat tickers, like inverse Tesla, inverse Coinbase. They have a couple others. Pretty good. So yeah, that's kind of what I'm buying up. Other things I'm buying up a lot of natural gas because it's such a good hedge for my kind of portfolio. Like I run all high fucking octane, bloodthirsty stocks. Like we're going to rip and tear through the flesh of the market. That's the idea. That's what Tesla does. That's what Nvidia has been doing. That's what Tesla is it has done many times and will do again. But I'm buying a couple others. I'm buying. So I've been following Cathie Wood's ARK Invest funds since her first kind of like biggest pop, maybe like 2020. And so I know those holdings pretty well. And part of why I know them so well is because, one, I can't agree more with the thesis, and I can't think of a single thing to add to it, which is kind of crazy. It's like batteries, artificial intelligence, automation, blockchain, did I say what? Robotics, genomics. Anyway, financial. There's like a ton of different sectors of our economy that are just like getting raised. And they're all feeding on each other in what they call these they have a name for it. It has something to do with like S curves feeding each other. Anyway, you'll have to go look at their rhetoric to understand it their way. But I can't agree more that those are the irons in the fire. Those are like the each one of those has hundreds of irons in the fire. So yeah, like that's what I think is basically happening. I think the economy is getting automated, and I think we're going to have 5 robots to every person by 2030. It could happen by 20. It depends on what you call a robot. Is a phone a robot, But like humanoid domestic robot, I bet by 2040, 5-1. It has to be that way. It can't be any other way, because the robots are going to have recursive demand, where like the first thing the robot is going to tell you is like, I need another robot. I'm so busy. Like I need another freaking robot. And it's how it's going to work. If it actually is efficient, if it can actually get good quality work done, that means that it's going to be making actual products and progress. It's going to be making progress. So, yeah, what else am I buying? I'm into Warner Brother Digital. They drop below $8.50. I'm going to be buying them. I'll buy them down to 50 cents, right? Like they have fucking cool brands. Like, I think just the value of their brands alone has to be worth more than $20 billion in the fullness of time, given inflation. It has to be that way. Given Bitcoin, if Bitcoin is $1 million a fucking coin, then, I'm just saying the dynamics of the future economy are such that the prices of everything is going to get inflated, except funny enough for Bitcoin, which truly is the hardest currency. And it takes a little bit to appreciate that. And so, yeah, like if you're not holding Bitcoin, nothing else is exactly safe. I think equities are pretty safe. Depends on where you buy them, obviously. And so I consider these to be great entry points for Tesla, Roku, Warner Brothers. How do I value that? I don't have any way to value it. And I've seen experts who have all of the credentials you can imagine value things completely wrong and interminably, forever, always. They always value it wrong. So I don't believe you. I don't believe your bullshit. You tell me what the price is, don't believe it. Like you can't tell me what the price is going to be. Nobody can tell me what the price is going to be. Nobody knows. Nobody can know. It is unknowable. Anything can happen at any time, which is part of what is so exciting about markets. But yeah, like people have price targets. We all have price targets. The idea is ownership, and you want to increase the amount of ownership in assets which are going to appreciate. And so those could be like houses, possibly even Teslas. If you really think about the rate of US dollar printing, like it could be possible that Teslas hold their value remarkably well because a lot of the value is just the lithium or whatever in the batteries. I'm not totally sure about that because the normal decline, normally electronics, which Tesla is an electronic, has about the same life expectancy as fruit or a diaper, like you get to use, it's got to be discarded. They get gross fast. Like a phone, a 2-year-old phone, I'm not touching that. Somebody drops their phone, you better pick it up. I'm not going to help you on that. If it's a new phone and other circumstances, I'll help you. Anyway, so what else am I buying? I'm buying a ton of volatility. The idea here is just that volatility is a mean reverting asset. And guess what? The only time you need to the only time volatility has any value is when you actually need it. And so it basically is like a playbook for me that just always worked. And whenever I exhaust my supply, I go fill up again. And so right now, I think the VIX is like at 13. It's going to spike to 17. And I'm going to have a bunch of marginable, borrowable shares that I can just cost average into. So I'm using VIXI to do this. I understand there is nothing, there's no free lunch here. So like VIXI has time decay and all sorts of other kind of like consequential factors that can make the price really move independent of the actual VIX. And every instrument is that way. Nothing is like a perfect tracker. I mean, some things are really good. ARKB, pretty good tracker on Bitcoin. You know, some things track well. But that's another one I'm buying up anytime Bitcoin dips. I'm just going to buy in forever again because I sold too much. I sold way too much. And so now I'll never get back my Bitcoin. But I'll just, I just have to buy every dip forever and hope that one day it does go below 10,000, which is kind of what I was waiting for. And I think that the reason why I was waiting for such an outrageous number is because I've been playing this game so long that the numbers just don't make sense to me. But what I've always known about Bitcoin is it has to go to infinity or trend towards the floor, but the floor cannot be zero. Solve that riddle. Until you can solve that riddle, you do not understand Bitcoin. So, it'll be a fun one for you guys to figure out. Also, like I said, I'm buying a lot of liquid natural gas, basically just a price thing. I know we are going to need a lot of LNG. I know that it's a useful commodity. I know that we're going to be, I'm trying to find my way into energy. If anybody has ideas on how to play energy, I just want to know what is going to make the most energy for the least money in the next 25 years. That's what I want to know. I think it has to be fusion. No, I don't know. It could be solar. Why can't it be solar? But like, I want to know the answer to that question. And then I want to buy a lot of it. And so, because I think we're going to need a lot of energy. I know, obviously, it's like saying you're going to need a lot of water, or you're going to need a lot of money, or you're going to need a lot of anything that you actually do need to make it in this world. And so, yeah, I think we overproduced, and there's basically political machinations that have nothing to do with the value of the export of the commodity. And that when we do begin, here's what I know about LNG, liquid natural gas, from being a market participant for a long time. When there is a real crisis, like a war, like go look at the price of liquid natural gas when there was actual fears of World War III, which is what the beginning of Putin's Russia-Ukraine event created. So that the spike, it was like 25x, it went from like $35 to $125. And it's because you know what you can't run out of? Energy. You cannot run out of energy. You turn on the switch, the light has to come on. It's got to come on. So the countries are going to pay whatever it costs to make the light always go on. That is what will always happen. And so until we get fusion or some other energy source that is guaranteed reliable, then countries are going to buy it in a crisis. So, but I just like it as a commodity, and I think it's undervalued. And so I like it for that reason. I like it intrinsically, but also it's extrinsically undervalued, I think. There's extrinsic values factors that are impacting the value to the downside. And so it's undervalued extrinsically and deeply valued to me intrinsically. Therefore, it's a buy. And so tickers I'm using UNG, UNL. That's about it. BOIL. I've got some BOIL calls. And we'll see, I'm not taking an extreme risk, but I'm definitely loading up. And it's because I believe that when it does reverse and normalize, we'll see UNG go from like trading at like 13, 14, 15 bucks to like 20, 25 bucks. In a crisis, 50 bucks could happen. Could possibly be. Anyway, I like it, and I want to get a good cost basis on it and then just keep holding it for as long as I can, because the time to sell it really would be when the supply is squeezed. And there's multiple things that could make that happen. But, war is definitely one of them. So it's a very good hedge to your portfolio if you're running high octane, Tesla type, NVIDIA-esque, ARK portfolio, Bitcoin, crypto, biotech stocks, or whatever. What did I miss? Robots. So, I'm buying also, speaking of genomics, I'm buying a lot of ARKG, purely a price thing. I think that it has to be a sector that's going to be sprung to life by artificial intelligence, but it already is teeming with life. And so it's only going to be magnified in that. And that'll be pretty cool. I'm also buying the dip on Apple. I don't know. I think it's a little bit hard of a company to value. The risk to me is that they do a share sale, but maybe they never do that. Maybe they just don't do that. Maybe they just keep doing buybacks. And if they just keep doing buybacks, then the price is kind of like Bitcoin. And then one day they can just stop buying back. And then anyway, I don't know. It's hard to value. I think that's a hard one to value. But basically the bet there is that it'll rally with everything else. So, point of this video, that's what I'm buying and selling. Just a quick my take on what I think is happening with markets. I think people are selling big tech to buy up these other parts of the market, basically small caps. And what we're going to be moving towards is a blow off top, which is when I want to short the market. I've just been kind of adding a couple of shorts here and there, mostly just adding volatility suppression by buying volatility. But I am interested in actually aggressively shorting the market. And so I'm looking for different, signals, basically. I don't know when that would be. I kind of agree with the idea that you don't want to just blindly short, because it could go up forever. Just it can only go to zero, but it could go up forever. And so, you don't want to just blindly short. But to me, there has to be a pullback. So when do I think the pullback is going to happen? When we see Tesla, Apple, and all of the laggards, all of the Rokus and the Warner Brothers or whatever, all of these stocks that have just been chop. When all of those spike at the same time, that's when I'm going to start shorting the market, because that'll be the blow off top. And so I don't think we're really that close to it. I mean, we are making these kind of new tepid highs, but it's not aggressive. I think we're basically going to consolidate up and down a couple of percent from here. And then there's going to be an upside catalyst, and the market will have a blow off top event. And then that is when I think we see some aggressive selling, and we maybe get some momentum selling. And it'll be interesting to see how far down they take us with that momentum selling. I bet they get, I would say they could get SPY to 475. I don't know. That sounds really high, right? That sounds really high. But anyway, who knows? It's all just speculation. Nobody can know. It's the price. So that's the idea. Just to sum it up, I think that the market is headed for a blow off top when Apple and all the laggards all rally at once on the same couple of sessions. That is when I'm going to be buying a lot of XXX inverse funds like SPX, and SQQQ, and LabD for inverse genomics. Anyway, there's a ton of them. Hibbs, FAS. Anyway, and I'll be buying up all of these kind of different sectors of the market and seeing if I can not only just, what would be fun is to actually profit from the decline. I've never done that. I've only ever profited from going up. I would also like to profit as I go down. and this should be possible. So that's the idea. And so I'm buying these different sectors to try and make that happen. And I've got a couple of small shorts, but I want to really build out a position and sell things to build that position. Once the blow off top happens. But maybe we get a pullback before then. Who knows? Could happen. I don't really think so. I doubt it. If there is one, I bet it's like, just the same as it's been. I think we need to see a day when everything rallies at once, maybe even multiple sessions. That is going to get the bears to like be too, they'll get too excited. So yeah, that's the idea. Of the blow off top, what I'm buying and selling, LNG, of course, Tesla. This is just what I'm buying. LNG, Tesla, genomics, crypto, basically just Bitcoin. Anytime it has a substantial dip, I add. And that's mostly me attempting to rebuild a position. It's a futile effort, but we still should try. And yeah, that's it. Oh, and Warner Brothers as well. And a lot of volatility because I think that it's on sale. So yeah, hope that was useful. That's my market outlook, and I'll see you guys.